Trinidad and Tobago, and welcome to the Bourse Report. Today we take a look at two stocks which provide a decent pulse on the economy of Trinidad and Tobago. We're talking about MASSY Holdings Limited and Trinidad Cement Limited. In the case of MASSY, for their first quarter results ended December 2017, and for TCL, their full year results ended December 2017. Let's take a look first at MASSY Holdings Limited, or MASSY. And for that first quarter period, MASSY reported earnings per share from continuing operations of $1.37, a 9.3% decline from the $1.51 reported in the prior comparable period. On a bright note, revenue from continuing operations did increase some 4.6% from just around $3 billion to $3.2 billion TT equivalent. However, that could not stem an overall decline in operating profit after finance costs from $220 million to $203 million, or a 7.8% decline. Share of results and associates did help to offset some of those declines, increasing 67%, or just around $10.6 million. But overall, profit from continuing operations declined from $162 million to just about $150 million, or a 7.8% decline. Let's take a closer look at MASSY's performance by business segment. And as we can see here, MASSY's largest segment, integrated retail, which accounts for just around 42% of profits before taxes for the group, would have declined some 8.1% over the comparable period, from $125 or $126 odd million to just around $115.5 million. Its energy and industrial gases segment did improve some 25%, from $58 or $59 million to $73.4 million. And its auto and industrial segment, the third largest segment by profit before taxes, decreased some 37%, from $46 million to $29 million. Interestingly, in its integrated retail and auto and industrial business segments, there was a decline in profitability as indicated by its profit before tax margins. And in the integrated retail section, which includes some of its businesses such as MASSY Stores, profit before tax margins declined from 6.7% to just around 6.2%, meaning that MASSY earned less for every dollar of sales generated. Similar trend in the auto and industrial segment, where more of the sales were generated outside of Trinidad and Tobago, particularly in the Columbia region, and in an environment of higher competition and lower margins, the profit before tax margin actually fell from just around 8.1% to around 4.3%. Let's take a look at what we're talking about when we mean lower vehicle sales in Trinidad and Tobago. And for the fourth quarter of 2017, new vehicle sales, as according to data from the Central Bank of Trinidad and Tobago, was just around 4,062 units, a decline of roughly 5.5%, almost 7% from the fourth quarter of 2016. And this follows another 15% decline roughly from the fourth quarter of 2015. So overall, a much more challenging environment which MASSY is operating in. And as mentioned, MASSY's major jurisdiction by profit before tax is Trinidad and Tobago. So at a $47 share price, MASSY is trading at a PE multiple of just around 10.7 times, below the sector average of around 14.7 times, and still offers investors a reasonably attractive trailing dividend yield of 4.5%, above the conglomerate sector average of 2.9%. So on the basis of reasonably attractive valuations, but again tempered by some adjustments in their major operating jurisdictions, Trinidad and Tobago and Barbados, we maintain a neutral rating on MASSY. Taking a look quickly at TCL, and for its full year 2017, the company reported a loss of 72 cents per share, which is in stark contrast to the profit of just around 10 cents per share reported in its financial 2016 period. Revenues for the group, for TCL, were down 9.2%, from just around $1.9 billion to around $1.7 billion. And the continuing costs of adjustment, including manpower restructuring costs and inventory costs, would have also weighed on profitability. Overall profits after taxes swung from a profit of $52.4 million in 2016 to a loss of $255 million in 2017. Now, TCL is again being affected by the economic conditions in Trinidad and Tobago. And here we have some central bank data for the last trailing 4 years in Trinidad and Tobago of cement sales, exports, and overall production. And as you can see by the orange column, there has been a consistent decline in domestic cement sales. In the case of 2017, it was just under 500,000 tons, whereas in 2016, it was around 526,000 tons, 5.5% decline there, and that follows another decline from 2015 overall. Good news somewhat is that exports have been increasing and overall production has remained relatively constant year on year. Now, in addition to an overall lethargic economic conditions, TCL also faces increased competition in the Trinidad and Tobago jurisdiction by rock-hard cement, which has caused some reduction in prices to confront these competitive pressures. As we can see, Trinidad and Tobago, as highlighted by the blue column, is playing less and less of revenue contribution to the group, with Jamaica in pink becoming more and more important as a revenue generation source. And over the period 2015 to 2016, Trinidad and Tobago shifted from accounting to just around 42% of total revenues to just around 36% of total revenues, whereas Jamaica moved in the other direction from around 32% to just around 41%. And once the 27 annual report is released, we expect that trend will continue. Importantly, for TCL, the other jurisdiction, which includes countries such as Guyana, Brazil, and Venezuela, has been increasing in prominence and is expected to do so as more focus is placed on exports. At a price of $3.50, TCL is trading at a market-to-book ratio of just around 1.7 times, above the sector average of 1.3 times, and offers investors a trailing dividend yield, and somewhat inconsistent, it must be said, of just about 0.6%. So on the basis of, challenging major jurisdictions of operation and relatively high valuations, Bourse maintains its sell rating on TCL. That's it for this week's edition. For more information and the full report on TCL and MASSY's results, you can visit our website at bourseinvestment.com. Give us a call at 226-8773 or email us at invest@boursefinancial.com. This has been the Bourse Report. Have yourselves a great investing week.